The gentleman from Florida, Mr. Ross, is now recognized for 5 minutes.
Thank you, Chairman. And I would like to begin by first explaining why I, as a capital purist and one who believes in free markets as the best regulator of all, who also served in the Florida legislature and chaired a committee that oversaw the efforts to bring back a private market in our property insurance, who, quite frankly, was one of 2 votes against the expansion of a government-run insurance company in the state of Florida that cost me my chairmanship. But I still believe that in this particular situation, a TRIA bill is necessary. And I go back to the fundamental principles of insurance, that not only do we need to have pre-funding of events in an actuarially adequate fashion, but also that we have adequate capital set aside, and that those that are responsible for maintaining and administering that risk have the ability to do risk management. And unfortunately, when it comes to terrorism, risk management is predominantly a function of homeland security. So, Mr. Wu, I agree with you that there may be a way to assess or predict or forecast terrorist events, but until such time as we learn how to mitigate against these, I foresee maybe State Farm, sponsoring gas masks, Farmers Insurance sponsoring flak jackets, and maybe AIG sponsoring F-16s in order to mitigate against attack, which of course is an absurdity. But I bring that out as saying that if we're going to say that we want a private market back, then we need to allow them to have what traditionally private markets have in providing insurance. I think adequate capital is necessary. Mr. Ellis, you talk about in your opening that in 1992, after Hurricane Andrew, the markets dried up, but then the reinsurance came back. Well, they came back as a result of a legislative change that created a Florida Hurricane Catastrophe Fund, not unlike TRIA. They came back because they allowed PUP companies, which were subsidies of major insurance companies, to be based in Florida and limit their liability. They came back because they had the Joint Underwriting Association for homeowners and also the windstorm pool. What I'm getting at is that as much as a purist as I am, practically speaking, from a political perspective, government's going to be involved. And to that end, how do we minimize government exposure? Mr. Ellis, I agree with you on pre-funding. I think that's absolutely important, that if we're going to look at transitioning over into a market to come back, we have to have some sense of pre-funding. Mr. Wu, based on your assessment, let me ask you, can you actuarially adequately price terrorism insurance?
I think that the question has to be put in the context of other catastrophe perils like natural hazards, right? And if you take Hurricane Irene, on its path towards New York City, at one stage, RMS did an analysis to show that when it was Category 3 in the Atlantic.
I agree with you, Mr. Wu, but we also have a cone of, I mean, we know 5 days in advance pretty much where it's going to go. We have a ways to mitigate and prepare once we know that the event is about ready to occur. We don't have that luxury in terrorism. So my question to you is, can you actuarially adequately price terrorism insurance?
Well,
you can't, can you? And that's the key here, because if you could actuarially adequately price terrorism insurance, would it be less than, equal to, or greater than what people are paying now?
A key part of actual pricing is allowing for a factor for uncertainty, right?
Right.
And uncertainty has an element of perception to it. And I'm the first to admit that obviously the perception of the uncertainty is very high within the insurance community. But if I can just make this point, which is that over time, again, with the kind of progress which I mentioned, namely people tracking courtroom convictions, people tracking this kind of social network analysis and so on. Over time, I think there will be a gradual better understanding of the nature of
But the pricing is what concerns me, because right now we have a government backstop. And my history in government backstops is, if you look at the National Flood Insurance Program, as you look at Citizens Property and Casualty Insurance Program in the state of Florida, it leads to bad behavior. It leads to building in high-risk areas. It leads to rebuilding in high-risk areas. And so what I'm saying is, if we're going to bring back a market, we're going to have private capital at risk. We've got to give them some opportunity. In my state, people say, well, give us adequate actuarially pricing. I don't know if we can do that in TRIA. I don't think we can, and until we can answer that question, we have to have a government backstop. But I think we also have to look at Mr. Ellis's points where we have to be able to pre-fund it. Because in the workers' compensation, you don't have exclusions in workers' comp other than fraud well, basically other than fraud, because it's strict liability. How are you going to be able to fund workers' compensation other than have a regulator who says, well, we don't have much of a market, so we're going to lower our standards? Then you have thinly capitalized companies out there that are going to go to a guarantee fund. Any comments on that? I've got 14
I've
seconds.
got to make a distinction between modelability and insurability. As I said, TRIA is needed for the absolute known knowns. Okay, terrorists, unlike natural hazards, terrorists target high-value properties.
I'm not disagreeing with you. I think, yes, TRIA is needed.
Okay,
But we've got to transition it over time. I'll yield back.
Time of the gentleman has expired. The chair now recognizes